We are going to go ahead and jump right into our next panel, and this is a good one, so you don't want to miss it. I am really excited to share that we're going to be having a conversation about the broader economic landscape and the data economy in particular, and thinking a little bit about how you can drive growth in that space and drive inclusive growth. So with no further ado, I'd like to welcome our panel. Our moderator is Kimberly Abbott, the CEO and founder of Vested Impact. And our two panelists are Leora Klapper, the lead economist of the World Bank, and Michelle Meyer, our own chief economist and head of the Economics Institute here at Mastercard. Thank you.
All right, I think we've been given the after lunch graveyard shift, so to speak. But just as a really quick introduction, so my name is Kim Abbott. I'm the CEO and founder of Vested Impact. We're a data platform that automatically assesses and quantifies the impact that SMEs have and companies have using kind of AI, 200 million academic papers and hundreds of millions of data points. And we've done that with Mastercard Strive. So just as a bit of a shout out to the work that Strive funds as part of the Center for Inclusive Growth in terms of helping small businesses kind of ignite their growth. Now, this panel, as was just mentioned, we're kind of looking at a larger macroeconomic picture of when we are talking about growth. It's not just about consumers, there is small businesses, there is also the larger multilateral and policy landscape. Now, as you heard, I'm joined by Michelle Meyer, the chief economist from Mastercard, and Leora Klapper, from the lead economist from World Bank. Now, I'm going to get straight into it. I'm actually going to ask the first question to you, Leora, because you lead the Findex report, but also the World Development Report. And so could you give us, just from your view and maybe some of the stats, what is the current state of financial inclusion and what are the insights you're seeing?
Thank you, and thank you for the invitation to join you. So the data points to real reason to celebrate the growth in financial inclusion, mostly led by digital financial products and services. So today, over 3/4 of adults around the world have an account. That includes mobile money accounts, card-based accounts, mobile banking products, including 71% in low and middle income countries. Most of these accounts are used to send or receive a digital payment using a card, phone, or the internet. And we're also seeing it's not only the big economies like China, India, South Africa, Brazil, but smaller GDP economies like Tanzania, Morocco, Bangladesh, making tremendous progress as well. That said, we still find exclusion. Women are still, in many countries, less likely to have an account. Even India, which really heroically leveraging digital ID, slashed their gender gap to 0 in 2021. Men are 18 percentage points more likely than women to use their accounts to make or receive a digital payment. So we still have room to go there. But what's special about demand-side data, so it's like Findex, which asks the users of financial services, is that we can ask the unbanked why they don't have an account. And we most commonly hear, it's too far away or the products are too expensive, which again are both barriers that various fintech products can help address, localized agent-based products in particular. So you mentioned like pain points on access and usage. Two things to point out, pain points, is one, access to digital ID. Well, certainly access to ID, preferably digital, and secondly, connectivity. Access to the phone to leverage. We see in Pakistan, for example, men being almost 4 times as likely as women to have a phone, really leaving women behind the starting gate. It's the final, and we find this very tight relationship between access to accounts, access to ID, and access to connectivity.
Thank you. And you've mentioned a lot there about that kind of end user and consumer access. So I'm going to ask you, Michelle, particularly given the role Mastercard plays in kind of delivering that last end sometimes. What have you seen and how has that shift, whether it's in technology or e-commerce, changed consumer behavior and inclusion? And what are you seeing driving that?
Sure. So thank you for the question. Thank you for that detailed response. I feel like there's so many things we can pick up on. But from, a macro perspective and thinking about the economy holistically, financial inclusion drives overall consumer spending, and overall consumer spending drives more economic growth, which allows for more innovation, more technology, and therefore better investments towards future inclusion. So it is all quite circular, as many things are in the economy. But for us, as we think about the path for consumer spending and what we've seen over the last few years, I think in many ways, COVID, because it created this big jump towards digitalization, more digital economy, it also created, in some ways, improvement in terms of financial inclusion. Very quickly, people had to get online. Very quickly, they had to find other ways to spend and to invest and to engage in the economy. So one metric that probably resonates in this respect is when you look at the share of spending that was done online, e-commerce. So for us, card not present swipes. It jumped up from the pandemic, and in many cases, it stayed at high levels. One great example that probably resonates for a lot of folks is when you think about grocery stores, the amount of spending that's e-commerce at grocery stores, that had a level shift up, and it has held. Because in order to get the necessities, in order to the groceries, all of a sudden there was these options online. Now, of course, that's more expensive. There's payments, there's fees associated with all that. But I also do think that it allows for greater access to many different forms of shopping and payments. So the bottom line is, yes, it's highly circular, and it all very much matters to stimulating greater overall spending in the economy.
So you mentioned metrics there, and I know a lot of the work we do at Vested is around data. We actually leverage off the work that people like you do, Leora, at the Findex report. So I think I asked earlier, I was kind of going to phrase this question on what is the role that data plays, but I know you mentioned, Leora, about we need to start talking about how do we actually use data when we're either understanding economic inclusion or measuring it and the success of it, Michelle. So I might start with you, Leora, on that question about how do we use data and what indicators are the most telling?
So I'll illustrate with an example. I've had the pleasure to test the Findex questions in over 30 countries around the world, and really the privilege to sit in people's homes, their yurts, their businesses, asking them about their financial lives. And we were in Ghana recently and talking to a woman, a merchant in the vegetable market, and she was telling us that every morning she borrowed money to buy that day's produce. She would repay at the end of the day twice what she borrowed in the morning from a money lender in the marketplace. And while we're talking, I'm noticing all these women taking their tomatoes and cucumbers and paying using their phone. They were using their MTN account to pay mobile money, P2P payments. And these are the type of data. So first of all, this idea that we're able to measure people's use of informal financial services, to understand the nascent use and demand for formal financial services. But also there's the data, right? So there's all sorts of, what creditors need is visibility into a merchant's performance. This woman probably doesn't have any collateral she could pledge, but she's showing every day her sales. This is real-time visibility. And second, the tremendous, credit risk. How do they reduce their repayment risk? So we're also starting to see all sorts of embedded, the World Development Report 2022, Finance for an Equitable Recovery, has a whole chapter talking about embedded finance products, which is the ability for the payment provider to repay the lender directly before the merchant, which has a big impact on reducing credit risk. So these are the type of data that we point to design new products.
You've already mentioned some of it, Michelle, but I wanted to give you another chance if you wanted to build on any type of kind of data, the role, the way that Mastercard uses it, or the way you think it should be used, either for financial inclusion or actually to understand consumer behaviors. As you mentioned, understanding inflation and some of the price points is also important when we're trying to look at how we better serve people in the macroeconomic market that we're in.
Absolutely. I mean, Leora's example is getting data on the ground, observing that data. We're instead looking at how people are using their cards, whether it's credit cards or debit cards across the globe, by understanding, those swipes, the amount of money that's going on there, where people are spending, how they're spending, trying to understand a little bit more about why they're spending. That's always a big question. And that is absolutely essential when you're trying to understand how you grow the economy and how you get greater financial inclusion in order to grow the economy. So one thing that is very clear when we do a lot of work around cohort selection in terms of our card spending. So we can, one of the big advantages I think of our insights and our data is that it's hyperlocal. So we have the ability to aggregate across different zip code levels, different characteristics of regions, and understand how cards are being used, whether it's credit or it's debit, what type of MCCs in terms of merchants. And there's quite different behaviors. There's different consumer baskets when you look at the lower income versus the higher income zip codes, whether you look at cities versus suburbs versus more rural areas. Generally speaking, of course, there's more card usage, more swipes, more activity in the higher income, more urban areas. But that's spreading. And the more that spreads, the more that changes, the more that there's awareness and access. And again, it all feeds into greater and more broad economic growth.
I'm actually going to throw a question straight back to you, Michelle, actually, because I know many of this week is not just UNGA week. It has also been New York Climate Week. And, we understand with inclusive finance, there's also going to be a just transition that needs to be addressed. And what impact do you think the increasing demand for those kind of sustainable and ethically produced goods is having on those consumers? But also, lifted up a level, how is that driving and affecting industries, either that you work with or just what you're seeing?
Oh, absolutely. So here's another example, I think, where our data comes in handy, and we've played around with this a bunch, is to try to create cohorts of MCCs or merchants where you have that push towards more sustainability, more ethically sourced, where the climate aspect is front and center, either from social media or just the heart and the premise of the company. So we can do some interesting work there as well to try to understand spending trends based off of how we're seeing activity in cards. And this is part of the why, right? So I talked about how you can understand the when, the how, the where. The why is the hardest part, and that's what we do struggle with a bit. And I think a lot of survey data there is very helpful. But doing these types of exercise where you can aggregate and try to find common similarities across the different data series is helpful, and we play around with that a lot and try to come up with what we think is not only correlations, but also potentially causations in the data.
And when we obviously talk about inclusive and sustainable growth, the key reason we're here today is also technology. And I heard you mentioned earlier, Leora, about some of the new actually metrics and indicators that I'm sure the Findex evolves, right, to start looking at how digital connectivity, you've mentioned some of it. So I'm just interested from your view about, if you want to speak about some of those new things that are coming up, but also the role that we've heard about policy, that regulation from a technical perspective is going to play on financial inclusion.
Sure, and give another story. As Michelle was discussing earlier, I think a nice follow-up. We were in Vietnam talking to a woman who sold beauty products. She had a small store, and she just created an online store. And she was complaining to us that all of her sales were cash on delivery. And so she would sell stuff, and she couldn't restock her inventory for up to 5 days until she got paid. In addition, people were buying stuff that they didn't yet have the money for, and so returns were extremely high. And so this was hurting her ability to do her business, also hurting her ability to build a payment history, as I referred to earlier, to get various cash flow lending. So the World Bank and others have been involved in over 50 financial inclusion strategies around the world. And these strategies, the basic rails, interoperability, competition, pro-consumer, a lot of consumer protection. And this is really important. I'll mention that, hone in on the consumer protection side. That's not only the infrastructure, it's also building trust. And if we look across, for example, the ASEAN, the Association for Southeast Asian Economy, you have Malaysia, Singapore, Thailand, where the majority of adults are buying stuff online like we do, but paying online. And then you have Vietnam, where over half of adults are making a payment, making a purchase, but it's almost all cash on delivery. Similarly, in Indonesia and Philippines, understanding, and that's where the survey data comes in. This year we have a new question. If you say you pay merchants only using cash, why aren't, and you have an account, why aren't you using a card or phone? And a lot of it is trust. trust that the payment will go through from the seller, that the goods will be delivered. Some of it's, most often we just hear the term, it's what I'm used to. Cash is what I'm used to. And so how do we develop not only the physical infrastructure, but also build that trust in the system?
So before I move to the kind of positive looking ahead, you've mentioned some pain points already, Michelle, but what are some of the current common barriers to creating an inclusive economy at that macroeconomic level, and how do you think they can be addressed?
Well, I think from a pure economics perspective, a lot goes back to access to education. And I would argue here it's not just traditional education, it's also economic education, financial education, teaching people across different income spectrums how to build that trust, how to understand, how to use the banking system, how to save, how to value money not only for today but for the future, realizing that there's the ability to invest. And there's a lot of organizations out there that are working really tirelessly to try to adapt the current education platform into one that includes an understanding about economics and the financial system. So that I think is essential, and I think we're making progress, but we're not there yet. And then, of course, I think technology, right? The more that technology is out there, is accessible, is available, to your point, the example you gave either just now or when we were talking before, I forget, was around how more people have phones than any other technology that you have seen. I think you were talking about in Ghana, right? So the fact that people have phones, they trust their phones, they can access the financial system or financial markets or the banking sector in some way through their phones, that's where that trust is. But how do you build it more broadly? How do you create that education so that people have the ability to access technology? And I think that ultimately, when you think about, the usage of cards versus cash, and you think about particularly credit, right? Credit is not something that's widely used across the globe. Some countries more than others. Here in the U.S., yes, there's a lot of credit usage. There's a lot of revolving credit. And that in part is to create loyalty. It's to help build up the additional support and attributes that you get from using credit. But that's something also that requires a lot of education, a lot of understanding, a lot of appreciation, so you can reap those benefits and you can do so responsibly.
I couldn't agree more on financial education. We've just done a piece of research with the industry body for fintech in the UK, where we assessed 3,500 fintechs in the UK, and it wouldn't surprise you to find, and probably most people in this room, the most impactful ones are the ones that are pairing financial education to actually understand the products that go with it. Okay, here's the big question, Leora. What do you see looking ahead in the next 5 years? And how can we ensure that as we kind of grow and ensure growth, that it is inclusive, particularly for underserved populations in the future?
So I'll answer that question also by following up on something Michelle said, which is around the important, certainly there's going to be, I always say we're asking questions now in Findex on products that weren't dreamed up. We started collecting the data 15 years ago. And just to plug, there'll be a lot of new questions, including a whole module on digital connectivity, internet access, use, and skills, which we're very excited about. But something we know, especially with less educated adults, poorer adults, is their lack of understanding of financial products. And I always say the onus for good financial behavior shouldn't only fall on the consumer. Something, like I say, when we ask adults why they don't have an account, we often hear, it's too expensive and I don't trust banks. Those two reasons are often given together. And it's not the story of banks stealing the money, it's that they don't understand the terms and the fees. That if there are countries that charge for balance inquiry. If you go to check your balance and you're losing money every time you check, you lose trust in the bank. If suddenly there were monthly fees you didn't know about. And so this greater transparency and disclosure is really key to greater usage and trust in the system. And that's, I think, where there's big technology opportunities. Certainly we think about AI for consumer protection. One of our new questions is around, have you ever sent money to the wrong phone number with your mobile money? Did you get it back? And I was looking this morning at data for one representative African country, where over 30% of adults said they sent money to the wrong number, and I think it was like 1% said they got the money back. So are there AI solutions that, if you send it to a number that you've never sent to before, I mean, that's not even AI, where it doesn't fit your profile, that at least something pops up, are you sure about this number? Thinking about technology to deliver information, at the, we call the teachable moments. When you're applying for a loan, additional, not, a 4-page form for you to click, but more just, user-friendly information to guide people at those teachable moments to have the greater information that allows them to make better financial decisions.
Your turn for a crystal ball, Michelle. What do you see going ahead for the global economy, and how do we make it inclusive?
Sure. So I'll first say I'm one of those 30% that sent it to the, but I actually got my money back, so that worked out well. So in terms of the path forward for the global economy, I think the first observation is coming out of the pandemic, expectations and forecasts were very gloomy. There was a lot of pessimism about how the economy was going to be permanently broken, how workers would be displaced, how businesses were going to be permanently shut down. And that negative sentiment was frankly wrong. That in the end, we saw a very strong recovery coming out of the pandemic, a lot of business growth, new business formation, a lot of innovation. Here in the US, we've seen some of the strongest productivity growth in the last few years that we've seen in decades. And a bigger increase in the labor force participation rate than expected, particularly amongst young women, back to the point around how you grow the workforce. The participation rate amongst women 25 to 54 is at a new record high coming out of the pandemic in the US. So I think a lot of progress has been made, a lot of investment that sets the economy globally hopefully on a higher potential. So in our view, we see continued expansion in the global economy across the board. I think the US has been one of the outperformers in terms of growth. India has been a significant outperformer in terms of exceptionalism in the economy, a diverse workforce, a growing workforce, strong demographic factors. But in general, we do think we're going to see further expansion, and we are hoping and really banking on the fact that technology will continue to drive greater financial inclusion, which then lends itself to greater overall spending and broader spending across the globe. So we're pretty positive.
And I think that is a positive note to end it on. So if you would just all join me in thanking Michelle and Leora for their time and for their insights.